Hello, everybody. Welcome to today's latest Added Network webinar. This one is for the enjoyment of our growing international tax community in Cyprus. And we welcome anybody that's joining today, whether you're in Cyprus or elsewhere. We hope that you will enjoy today's event and get lots of useful information from it. Today, we're going to be looking at DAC7 and DAC8, looking at transparency rules for digital platforms, as well as crypto asset transactions. The webinar will first outline the key provisions of DAC7, the 7th update in the EU Council Directive on Administrative Cooperation. As of this year, new reporting obligations require digital platform operators to disclose specific information about how their platforms are used. The webinar will also explore the objectives of the next update, DAC8, which will focus on tax information reporting and exchange for crypto assets. It's my privilege today to be joined by our speaker, Constantinos Kounnis, who will be guiding you through the topics. Constantinos is the founder and managing director of Kounnis Partners Ltd, an accountancy firm which specializes in audit, tax, and advisory work. He is also an active member of the Tax Compliance Committee of the Institute of Certified Public Accountants of Cyprus. As an experienced tax practitioner with more than 15 years of experience, Constantinos advises on effective international tax structuring, corporate reorganizations, and estate planning. Constantinos is also an international tax affiliate of the CIOT, having achieved his ADIC qualification in 2018. If you have any questions for Constantinos during the course of the webinar, we are going to be running a Q&A session at the end. So please type in any questions that you might have using the Q&A field, the Q&A box that you've got there in Zoom. So no matter what kind of how it relates to the topic, we welcome any questions. So please do type them in if there's anything that you'd like to be further answered after the main session. So without any further ado, I'm going to hand over to Constantinos. Thank you very much.
Thank you. Thank you, Rory, for the introduction. It's always a pleasure to be able to present in these added webinars. Let me just take a moment to share my screen and make sure everything is okay. Okay. So let's make a start. As explained by Rory, this webinar will actually focus on the newly implemented DAC7 and more recently DAC8 provisions, which specifically focus on tax transparency rules for digital platforms and crypto asset transactions. So before making a start, just a brief introduction on who we are. We are a medium-sized firm in Cyprus, and we specialize in the areas of audit, tax, and financial advisory. We do quite a considerable amount in tax work, and this is why we'll take the opportunity to analyze these important topics. So starting off, I just want to spend a few moments to talk about the provisions of DAC, which stands for the Directive on Administrative Cooperation, that was originally introduced back in 2011, and ever since it has gradually evolved, introducing more tax transparency and cooperation across member states. So the original objective of this directive was to provide a framework for a very efficient cooperation between tax administrators. It actually applies to all taxes, and more recently it has expanded to cover additional taxes, and it specifically functions using spontaneous information requests, specific information requests, but more importantly, automatic exchanges, whereby tax administrators are required to automatically share information with corresponding member states as far as the affairs of specific taxpayers. The directive also provides for other forms of coordinations, assistance, and cooperation between member states, such as joint controls and joint audits. Okay, we have the chance to talk about more about this in due course. Over the period of the past few years, the Directive on Administrative Cooperation has evolved significantly. It was amended multiple times, and it has broadened the scope of its original intention and reporting, which was to report and exchange information on 5 categories of non-financial nature of income and capital, such as employment income, directors' fees, life insurance products, pensions, and rental income, and expanded into automatic exchange of financial account information, that was DAC2, automatic exchange of tax rulings and advanced pricing arrangements and agreements, that was DAC3, DAC4, automatic exchange of country-by-country reports, DAC5, which ensures that member states have access to beneficial ownership information about entities, and DAC6, which focused on automatic exchange of reportable cross-border arrangements that meet, as we know, specific hallmarks. The latest 2 updates are the subject matter of this webinar. So DAC7 focuses specifically on information exchange which have to be made by reporting digital platform operators, and DAC8 focuses on automatic exchange of information by reporting crypto asset service providers. A very useful representation graph that you can actually refer to is the following one. This is found from the Europa website and effectively summarizes the evolution of DAC over the past few years. DAC7, so let's dive into the material. DAC7 was introduced on the 22nd of March 2021. However, Cyprus has only enacted this into the legislation very recently on the 3rd of November 2023. The main objective of this revision was to address all the challenges and issues of the digital economy. It was evident that people are transacting more and more using digital platforms, and sometimes they fail to report the income they earn through these platforms to the tax authorities. So the main objective of this directive was to actually impose due diligence and reporting obligations to those digital platform operators in order to collect information from what we call reportable sellers, in other words, taxpayers earning income through the platform and engaging in specific activities. The specific activities, as we'll see, they cover a range of items, including sale of goods, sale of personal time, specific activities that focus on rental of immovable property, and rental of any mode of transport, okay? So this is the nature of the relevant activities that are covered by the directive. We'll talk a bit more about that in due course. In addition, DAC7 had also introduced a framework which enables joint audits and additional cooperation between member states. The reporting, which is covered by the directive, begins on the 1st of January 2023. So that's the first reporting period, with the first actual reports filed early in 2024. So I have tried to pictorially represent the participants involved in a platform exchange so that we can understand that a bit more easily. So as you can see, a digital platform facilitates transactions, relevant activities, which could be sale of goods, rental of property, websites like Airbnb, Booking.com, personal service, and rental of any mode of transport. There are users to the platform, and there are sellers that provide those services. And obviously, we also have the platform operator, that is the owner and the manager of the platform. So the first definition that we should be aware is what is a platform, and that's a broad definition covering software, websites, and specific applications, including mobile applications, which allows connectivity of various users for the purposes of carrying out a specific activity. Okay? Now, from that specific definition, we have certain exclusions, and the exclusions cover platforms which allow processing of payments like PayPal or Stripe, advertising platforms, or any platforms which redirect users to a digital platform operator. Okay. Now, moving on, we need to understand what is a reporting digital platform operator. Well, that is the entity that owns and manages the platform, and it actually covers both EU resident platform operators, but the directive also talks about non-EU platform operators, which facilitate carrying out relevant activities by sellers that are resident in a member state, or they facilitate an activity which relates to rental of immovable property located in a member state. Okay, so a wide scope of platform operators, very, very important. Some operators may be excluded if they demonstrate annually that they have no reportable sellers whatsoever. So what the directive provides is that there's going to be a register where they report that, they register and update that on an annual basis. But if a digital platform is resident, incorporated in a member state, or if a digital platform operator is a foreign non-EU platform operator and has something to do in the European Union, then it would most likely be a reportable digital platform operator. Now, who is a reportable seller? A reportable seller is effectively an individual or an entity, a taxpayer effectively, that is registered and uses the platform in the sense that it's carrying out what we call relevant activity. Reportable sellers should also be residents of a member state carrying out a relevant activity. Otherwise, if they are not residents, then they should have EU sourced income in terms of facilitating and renting out immovable property which is located in the European Union. Okay, so this is how the reportable seller is defined. Sometimes we have certain exclusions which cover governmental entities or listed entities or sellers for which they perform a certain number of transactions. So there are thresholds to consider here, thresholds on the basis of materiality. For example, transactions which are less than 30 and the total amount of the consideration does not exceed 2,000 euros. That's an exemption by way of materiality. Or sellers which have such an increased activity that the directive doesn't really want to impose any additional burden, like a hotel, for example. Okay, so if the seller performs and facilitates more than 2,000 relevant transactions for a specific immovable property, then it's not called a reportable seller. And most importantly, the nature of the relevant activities that fall within the provisions of this directive focus on renting of immovable property. So that would cover things like apartments, renting of apartments, renting of holiday accommodation, vacation homes. Typical websites would be Airbnb, VRBO, Booking.com. These entities will have to register and report the reportable sellers. Renting of transport being bicycles, motorbikes, vehicles, boats, yachts. So companies like Get Around or Outdoorsy. Providing personal services. So personal services could be things like online teaching, coaching through a platform, ride hailing, providing a ride to somebody and getting paid for that, food delivery, babysitting, teachers, any activity which involves time or a task-based work by individuals, either independently or on behalf of an entity, would be falling within the scope of a relevant activity. And finally, selling of goods, any type of goods, including foods, crafts, second-hand items, even real estate property. So companies like Amazon, eBay, Etsy would fall within the scope here. Now, the following diagram, it just shows the process of information collection and reporting to the tax authorities. So if you follow the arrows there, you will understand how the process works. So each digital platform operator should have established the means to carry out due diligence on specific sellers. So collect information with respect to their identification and member state residency details. And the platform operator should report the information to the local tax authorities. What the local tax authorities would do in turn is automatically exchange this information with the corresponding tax authorities where a user or a buyer is a resident. So this is the flow of information here. So we have a feedback of info from the seller to the platform operator, and we have the tax authorities automatically exchanging information with the member states. Some of the practical considerations that have to be taken into consideration here is that the platforms must develop means to capture this information, to be able to report this information in a timely and accurate manner. So they need to plan that in advance. They also need to consider any registration procedures established in the member state of residence. and the technicalities that are involved in terms of automatically reporting this information with local tax authorities. Now, these specifics will be shared with Cyprus tax authorities in due course. The legislation has very recently been implemented, so we are still in the process of awaiting more guidance as far as the specific process of registration, reporting by these digital platform operators. Now, the reportable information which is made by the reporting digital platforms would include a number of things like identity of the seller, its European Union member state of residency, the financial account, the tax identification number, its VAT number, and most importantly, the consideration paid or credited per year. Remember, the intention of this legislation is to actually capture instances of unreported income. So the digital platform operator is feeding this information back to the corresponding member state of residency. It also reports information about fees and commissions withheld by the platform and where the underlying service is of a rental of immovable property, the rental income, and also the number of days the property was rented out. Okay. Now, as we said, at a practical level, the platform operators must have the mechanisms to be able to collect and report this information, and they must also be in a position to deal with situations where a specific seller is not very cooperative. So the directive here provides that in those situations, the digital platform must shut down the account of the seller if it fails to provide information within 60 days of such a notice. Reporting deadlines, as we said, the first reporting period would cover the 1st of January up until 31st of December 2023, with the first reporting made by the platform operators to the local authorities 31st of January 2024. So that's going to be the first declaration. From there on, the tax administrations have 2 months from the end of the reportable period in order to automatically exchange that with the relevant member states of the seller. Okay. So this will effectively be made by the end of February 2024. Penalties. The directive provides that penalties must be effective, proportionate, and dissuasive. That's Article 25A of the directive. Now, looking at our legislation, which has been recently enacted and uploaded on the tax department's website, penalties can be quite severe. They range from 1,000 euros all the way up to 20,000 euros. So we have 5,000 euros for failing to register in the prescribed manner, 2,000 euros for failing to retain documentation in the prescribed manner. That time period usually covers about 5 years. 1,000 euros for failing to close the account of a seller if they refuse to cooperate and provide information, up to 2,000 euros for providing inaccurate or false information, and in case the fine is not paid or the offense continues for a significant period of time, the authorities have the capacity to increase the fine up to 20,000 euros. So significant penalties involved. Now, some of the remaining provisions of DAC7 relate to joint audits. That's Article 12A. In a specific joint audit exercise, we have 2 or more countries or tax administrations joining forces, forming a single team, visiting a specific country to conduct an examination. So theoretically and practically, I would say that joint audits facilitate quicker resolution of specific tax issues. We also got a new Article 25 to ensure that exchanges which take place between platform operators and tax administrations are GDPR compliant and they follow the provisions of data protection regulations. Finally, another provision of DAC7 is that the information which is communicated between member states is effectively used and may be used in a broader sense to cover other taxes, including VAT and other indirect taxation. Okay, so they are beginning to have the means of assessing for other taxes. And those are the most important elements of DAC7, which is recently implemented. Now, I'd like to spend a few minutes to talk about DAC8, which is a very, very recent amendment that only happened on the 17th of October, because this would be very relevant over the next couple of years. Now, this new amendment took place on the 17th of October 2023. Member states are required to adopt that by 31st of December 2025, and the new provisions would be applicable as of January 2026. The key objective here is to enhance the tax transparency as far as cryptocurrency transactions and address the growing challenges of the digital economy with respect to the use of crypto assets. So, under the new provisions of Article 8.8 of the amended directive, there are new rules which extend the automatic exchange of information. Crypto asset service providers, we'll have a look at what that is, will have to report all transactions of crypto assets in e-money which are carried out by crypto asset users. In other words, they are clients, and they need to report this to the local authorities. This specific directive, DAC8, also introduces a number of other amendments to the legislation covering previous amendments in order to improve tax transparency and information exchanges. So let's have a look at the specific provisions here. Again, using that diagram facilitates our understanding. Crypto asset service providers applies both to crypto asset service providers which are authorized under regulation in the European Union, Regulation 2023/1114, markets in crypto assets, that also has an extraterritorial angle as well, in the sense that it also covers the crypto assets operators which are located in any non-EU jurisdiction, but they provide services in the European Union. Okay. So the crypto asset service provider is effectively a legal entity or undertaking which provides any kind of services that have to do with crypto assets. It could involve custody, administration, operation. It could be a platform for exchanging of crypto assets, exchange of crypto assets upon orders of clients. So all these would come within the scope. The definition is actually found in the regulation 2023/1114, which should be read in conjunction with this newly amended directive. A reportable crypto asset user, here we're referring to effectively a customer of the crypto asset service provider. It could be an entity or individual that is resident in a member state. Some persons here are excluded, for example, listed entities, governmental entities, international organizations, the central bank. Other terms reportable crypto asset includes crypto assets defined under the regulation and central bank digital currencies. So it's quite a broad definition. It captures the crypto assets and e-money effectively. And the reportable transactions involves an exchange, crypto assets to fiat currencies, crypto assets for other crypto assets, or transfers, moves of crypto assets from one address to another. Okay, so that's the subject matter of the reporting effectively. Again, the flow of information, the crypto asset service provider has the requirement here, the obligation to collect information, carry due diligence measures on the crypto asset users, and report to the local authorities, which would in turn automatically exchange information with the corresponding or relevant tax authorities overseas. So this is the flow of information. Now, the reportable information here would cover things like the crypto asset user details, the name, the address, the tax identification number, the member state of residence, but it would also include information on the crypto asset transaction the crypto asset provider has carried out or effectuated during the relevant reporting period. The reporting deadlines. Well, the first reporting deadline commences on the 1st of January 2026. The crypto asset service providers have to collect information and report to the local authorities over the course of the following calendar year. And consequentially, the tax administrations must automatically exchange states between the relevant member states within 9 months following the end of the calendar year, which corresponds to the reportable period. So the first automatic exchange would take 9 months after 31st of December 2026, which is going to be September 2027. It's still quite a long way to go, but adjustments must be made, and crypto asset service providers must prepare for these kind of exchanges. Other provisions of DAC8 which are relevant here. Again, as we said, DAC8 has introduced amendments to the previous legislation, so it effectively tries to improve transparency across border communication. So one of the things that it does is it extends the scope of automatic exchange of information on what we call non-custodial dividends. Non-custodial dividends are dividends which are paid in a non-custodial account. Another important change here is that DAC8 includes provisions to address specific advanced cross-border rulings, which are amended or renewed after the 1st of January 2026, and they relate to natural persons, provided that the amount of the transaction or a series of transactions exceed a specific threshold of 1.5 million. So it's effectively addressing wealthier individuals here. Or any advanced cross-border rulings which determine the tax residency of a natural person in a member state. Okay. Again, these cross-border rulings address wealthier individuals here. Moving on, the directive also introduces an exemption for lawyers which are bound by legal professional privilege from notifying other intermediaries of their reporting obligation. There was a case about the matter which is worth visiting, case C694/20. So instead, lawyers will notify the client as opposed to notifying another intermediary, and the client would have the obligation of making the declaration and the reporting as far as the hallmarks are concerned. In addition, DAC8 also broadens the application of DAC for other taxes, VAT, and other indirect taxes and custom duties, also addressing AML considerations. And the final point there is that DAC8 attempts to enhance the rules on reporting, communication, and the use of TINs, tax identification numbers, in all the reportings which takes place. In actual fact, the attempt here is to enable tax administrations to validate and verify the TIN corresponding to a taxpayer using a specific tool. Okay, so that was the main provisions in a nutshell. What I've got here is some useful material which you can have a look. I've got the European Union amendment of the directive DAC7, the local legislation which has been introduced, income tax department, the Europa link to DAC8, the regulation 2023, and that decision we've just referred to as far as the legal professional privilege. Some concluding remarks and comments here. I know that it's still early days as far as the introduction of the legislation. We are still awaiting clarifications as far as a number of practical issues and technicalities as far as the registration, as far as the reporting, the method of collecting information and reporting. So I would imagine that the tax authorities would proceed to make a relevant announcement very soon, as the first round of reporting is really around the corner. Concluding, I would like to say that our office is able to assist taxpayers to understand their compliance obligations with respect to DAC7 and DAC8 and assess whether they fall within the definitions, whether the scope of within the scope of the directive, and also assist with the process of reporting as a managed service. So thank you for the time and the opportunity to listen to this presentation, and I would be happy to address any specific questions.
Thank you very much, Constantinos. That was excellent, and I think a really excellent exploration of both of the directives. We have had a couple of questions already. So once again, if anybody does want to contribute any more questions, now is the time. And then obviously Constantinos will then be able to answer them live. We have one question just asking from Kate, will it be possible to get slides from the webinar? Yes, we do routinely share a copy of the slides. So if everybody that's joined us today, everybody that's signed up will, you'll get an email in the coming days with a link both to the recording if you want to watch it again, or if you've missed anything, and also the slideshow, so you'll have access to that material. And another question from one of our anonymous attendees. Can we speak a little bit about the real aim behind this, or how the Cypriot tax authorities will utilise this? I imagine that the Cypriot tax authorities will receive massive data sheets from across the world about Cypriots renting holiday homes, ordering handmade gifts from Etsy, and renting scooters in Italy. In return, they have to channel the same information. What do they hope to gain from this whole setup, cost-benefit ratio?
Yes, I think the answer is relatively straightforward here. Every year, there are significant amounts of uncollected tax revenues, which effectively represent revenues which are earned through the platforms and not reported. So just to give you a typical example, a taxpayer may be renting a holiday home in Athens or in London through Airbnb or Booking.com and never declaring this income in its income tax return. Now, the new DAC7 regulations would facilitate this information to the tax authorities back in Cyprus. It is going to be a reporting obligation of such a platform to feed that information back to the tax authorities in Cyprus, and the tax authorities would have a leverage against that specific taxpayer, meaning that they collect more tax revenues in their pockets. So it's a financially and a tax-driven measure and incentives, as member states are effectively losing significant amount of revenue. Okay.
Thank you very much. And another follow-up question. I think the Greek tax authorities already ought to have that information from the Greek banks.
Yes, not necessarily. The banks don't necessarily receive that level of information. So having another layer of reporting through the digital platform operators would effectively provide the tax administrations with more specific evidence as far as the unreported income. I mean, we're talking about things like reporting the number of days of rental income, the amount of revenue recorded through the platform. So we're talking about more specific information collected here.
We don't currently have any further questions at this stage, but if anybody does have another question, feel free to submit that. In the meantime, I'd like to just very quickly give a little plug to our growing set of ADIT webinars. We are looking ahead already to next year, to our 2024 program of ADIT international tax webinars for our kind of global community, and also for our local network webinars for Cyprus and the other countries and regions where we have our champion-led networks. We are always keen for ideas for topics. So if anybody viewing our session today has a topic in mind for a session that they would like us to cover in a future ADIT webinar, either specific to Cyprus or maybe a more kind of international or global issue, then feel free to get in touch with us, drop us an email or follow us on LinkedIn, and you'll be able to get that idea over to us, and then we'll take it on board. We've got one more question there. Will DAC8 capture finance users? Is that?
Yes, I think that the definition of crypto assets is quite broad there. So it will most likely address those as well. So the scope here is to capture anything as per the definition of a crypto asset and e-money. Yes.
Okay. Wonderful. Well, thank you once again to Constantinos and to everybody that's joined us today. We hope you've enjoyed the session. And as I say, we'll be looking to do more of these sessions on a wide range of topics over the year to come. So just follow us on social media or check out our website, and we'll have all the latest news on our next webinars. And thank you once again to Constantinos, and enjoy the afternoon, and everybody have a lovely afternoon and rest of the day.
You too. Thank you very much. Bye-bye.
Bye-bye.